Today I want to talk to you guys about finding the retail stops and the markets overall. I do want to preface this to make the lawyers happy. I pay them good money and we got to keep them happy. The information contained in this presentation is for educational purposes, not constitute investment advice. The risk of trading markets can be substantial. You should carefully consider if engaging in such activities suitable to your own financial situation. Trade Pro Academy is not responsible for any liabilities arising as a result of your market involvement or individual trade activities. Past performance is not indicative of future results. There you go. Lawyers are happy. Checkbox. What I like to do when I first start out is I like to start out with a little bit of an exercise. And this is really eye-opening for myself and for a lot of traders. I've dug a lot into trading psychology. I'm in the process of being certified as a neuro-linguistic programming person that could go in there and actually rewrite behavioral psychology patterns. It's very important for success in trading. But a little exercise I like to do with the group, and we'll speed it up a little bit so I can stick to my time frame. I want to ask you guys a few questions, and I'm not sure that I could see the answers. Can I, Renee? I think I can. Yes, there we go. I see the questions. I like to ask you guys these questions. To look around your room, and please participate. I know it's a little bit strange to look around your room when you're in a webinar, but just take a look around and notice everything around you that's green, the color green. All right, just take a look. It's going to get to trading, I promise you. Take a look, notice everything that's green, and close your eyes for a moment. All right, I'm going to assume that you guys are going to do it right now. Ready? 1, 2, 3. Eyes closed. What in the room is the color red? All right, are you able to identify anything that was red? And the interesting thing about this exercise is this. The lesson in this is that the information you need to be successful is available to you, but you just have to be trained to see it. There's a lot of market information out there that's in front of us. We're in a market right now that's most available to the retail trader. You can trade like an institutional trader successfully. You have the same tools. You just have to follow, analyze, and scan the same information. So I really like to do this experiment because when you focus on one thing, you totally miss the other. And as traders, I'll tell you a little bit about myself in a brief moment, but as traders, we tend to always look for the one thing that'll give us an edge. And at the end of the day, we're missing the most important information, and that's working on ourselves. All right, the trading strategy is the vehicle, and you are the driver. You are in charge of execution. And a lot of times, traders will come to Trade Pro Academy with some issues around their strategy. It's broken. This isn't working. What's an indicator? What's something I could use to make millions in 13 seconds? And the truth is, it often starts, the journey starts with you and looking at it. In today's webinar, I'm going to actually share a little bit more of a tactic with you and what you're going to learn here on what moves markets, what's the prime cause of market movement, and how to always use that information in your advantage, how to think like a professional and start to ditch the ways of thinking like a retail trader. All right, and I want to ask you guys this one question. What moves markets? I'd love to get some answers in the chat box here. What moves the market? Any market. It could be Bitcoin, it could be oil, it could be US T-bond futures, anything in the world. Currencies, yen, news. Hello. Supply and demand. Donna says value, buying or selling. Demand, supply, is coming in for a lot of things. Human psychology, Warren, you're warming up, Warren. Emotions, so you guys have a lot of good answers here. Perception of security, these are really good answers. I'll answer that question for you by the end of the presentation. In fact, you're going to be able to answer it yourself with a new lens. I'm going to give you a pair of glasses that'll help you see the market like a professional, and I'm not going to sell them to you, they're free. Here's my story. I started trading at a very young age. As Renee mentioned in the introduction, my dad got me started with currency trading. I started trading XAU USD, which is a currency pair that follows gold. I had a lot of success as a teenager. I had more money than I knew what to do with, and I thought my life was set. I was about 17 at the time. I had money in the bank account, and I felt like a millionaire. But, you know, in any journey, in any rally to the top, you know, there's dips, there's ebbs and flows, there's troughs and peaks. I ran into some problems with gold because I was taking a strategy as an investor approach. I was just buying the dips and buying the dips. And when the sell-off happened in gold back in the day, I started trading at $5.60 an ounce. It just broke 1,000, went to 1,030, and then it sold off, and it wiped out everything I had. And right then and there, I learned a very valuable lesson. It's not the return that you're chasing, it's a risk-adjusted return. You have to think more of managing risk than you do of anticipating and chasing gains, all right? I always say this quote, amateurs chase returns, professionals manage risk. A profit in the market is a return for being a good risk manager. It's a reward for being a good risk manager. So from there, I went to do some training. I looked around the internet, I read everything, watched every video I could find, bought every book. And then I ended up going to school to be a financial planner. I realized that financial planning is just selling products to people and telling them what they need to hear to buy it. I wasn't happy with that. Once I graduated, I joined one of the bigger banks in Canada. It's one of the top 6 banks. I became a trader on the floor, and this was about 2008. And in 2009, we all know what happened, the big collapse. I heard some really bad, some really, really desperate calls, some really bad things happening. Some of the things I honestly still to this day can't get out of my head. It's just some of the emotional connections that people had around money and the devastation it caused really started to upset me. And I decided at that point forward, I'm going to dedicate the rest of my life to helping other people trade. Sounds cheesy, it sounds corny, but it's because you don't know me yet, and it's true. So from there, I launched Trade Pro Academy in 2012. We've grown relatively quickly. We have swing trading and day trading products and services, and I'll explain that in a little bit towards the end of the presentation. But I was really driven by the need to help investors be successful. I became successful myself through trading. I had some really good results and continue to have good results. I'm day trading live every day for the majority of the income, but we've kind of evolved, and we're in some early talks where we're actually building some education for proprietary trading firms as well. So when we call ourselves Trade Pro Academy, we do mean pro as in professional. So that's what we focus on, bringing professional grade education to the retail investor. All right, what you're going to learn today is how to find out where stop losses are in any market and how to make money as these stop losses are being run. All right, I'm going to take you through that. First, I want to revisit this retail trader mentality. And I know some of you are in different parts of your development. It might be simple for others. This might be an eye-opener for some. And here's how your typical retail trader looks at the market. They say, oh, it's too risky to buy. We've already had a run. It's kind of dropping. It's going down. I'm not really ready to jump in. And this could be Bitcoin in 2009, 2010, 2012, whenever it was starting. It got started really early, and I had an opportunity at $7. I missed it. But I'm a trader. I'm not an investor. I make money day trading, and I invest in real estate. But it's too risky to buy. This is the retail mentality. And they'll say, well, you know what? I'll get it on the next dip. It goes up, and they say, I missed it. I'm going to wait for the next dip, and I'm going to buy it. And so the dip happens. You apply your RSIs, your ADX, your Bollinger Bands, and you say, this looks like a phenomenal level. It's a great support. I'm going to get long. And you go long. And you start to make a little bit of money, and you say, woohoo, I'm profitable, I'm a professional, I'm going to buy more. You start planning your vacation and how you're going to buy Ferraris and houses and Porsches. And that's where you're at. And it's great. You pick the long, you're profitable. Now, here's the institutional trader mentality in comparison to that. They're already long. They've taken smaller entries. And I think Ken was talking about this, about scaling into a trade and lightening it up on the way up. That's a very common institutional tactic, because the bigger you are as a trader, not physically, position-wise, the bigger position you got to work, the slower you got to accumulate it without moving the market. All right, and this is what the institutional trader says. I'm going to add. I'm going to buy a little bit more. Where it was risky for the retail trader, institutions adding. And then they're starting to say, you know what? It's starting to get risky on this dip. I've had some profits. The amateurs are onto us. It's time to start selling the rallies. It's time to stop buying with the retail herd and start selling it to them. And right at the top where the retail trader is excited, that's their peak emotion for opportunity. They're thinking greed, buy, buy, buy. And what happens? They start selling, all right? Retail takes a fresh long. Here's your breakout traders, they get long. Dip traders are long as well. Everybody's long. Boom, the first stop loss run happens. What happened? Retail says it's gonna go up. Martingale, average down, baby. Keep buying until you make it back. Martingale, by the way, one of the most dangerous strategies. If you wanna look at a good strategy, Google reverse Martingale. Strongly recommend that one. And then on the bounce, institutional traders say it's time to lighten up some of our account. They'll sell. Another stop loss run happens. Retail buys more. Rallies again, institutions sell to flatten out their position, and then the last wave of sell stop hits. And this is where retail just gets wiped out on their trade. They just have nothing more. They have no more emotional resilience, no more strength, no more capital. They just don't want to deal with this. They say trading's not for me. And guess what? Institutional starts eyeing the long at that very precise moment on that peak selling and exhaustion. And at Trade Pro Academy, one of our strengths is identifying when these stops are going to happen and also identifying when the rallies are going to happen, but not by looking at what levels are important, but looking at the market through a different lens, something called order flow. And if you've ever experienced this, I've been trading for a real long time. I know this feeling. I know how this feels. I know the physical and emotional sickness that you get out of constantly losing and getting taken out of a trade. I know that stomach turning, gut wrenching feeling. I know it very well. All right. And what I want to do for you today here is just flip the market on its head. All right. And I want to get your guys' participation on this once again. After a strong rally, what do we have? What happens after a strong rally in the market? Longs, right? We got a lot of buyers that have bought. What are long traders? What are long traders? Well, let me ask you the question a different way. What does a buyer have to do to get out of the market? Very simple question. I'm not trick questioning you here. I promise. Bill says sell. Sell, says Richard as well. Good job, guys. That's exactly what you got to do. You got to sell out of your position. Joe says sell as well. Well, is it not true then that as a long trader, you are actually a seller waiting to exit? You may have a take profit target, you might have a stop loss, but the biggest thing I need you guys to learn right now is that long traders are sellers waiting to happen. At the right moment, at the right condition, that's called a puke in trading. They're gonna puke, they're gonna get rid of that position and dump it. It might take some work, it might take some time, but longs are eventually gonna have to get out, all right? Also, we gotta understand that some markets have a different combination of these type of investors. You have the investors that buy and hold, you have the swing traders, and you have the day traders. And levels which cause the biggest movements are levels which all three are ready to dump at the same time. Most of you have a dump on 2 and 3, but 1, 2, 3 will get you one of the biggest sell-offs, and that's in fact how market reversals and bear markets commence. All three traders dumping at the same time. All right, so let me teach you some of this stuff. This is a live trade from today, and it's on oil. All right, we were looking at the support level here on oil, and at about 5:30 in the morning, 7 a.m. or so, when the equity overlap between the United States and Europe, I started to see a little bit of support here. All right, early on before the 9:30 US market open, we started to see support a second, third, fourth time, fifth time, sixth time. What do you do? As a trader right now, I want to get your guys' input. Do you buy this or do you sell it? What's the group dynamic here? What do you think would be the just looking at just this info and nothing else? What do we do? Do you guys think you want to sell or buy? All right, 3/4 of the polled participants, because only 4 were brave enough to speak up, 5, 6, 7, 8, most of them are saying buy. All right, the majority of the market say buy. But let me tell you this. Let me ask you a second question. There's a support that's held 3 times, 1, 2, or 3, and there's a second support that's held 8 times. Which support is a stronger support, number 1 or 2? 2? All right, that's the retail answer too. The real answer is number 1. The less times it's traded, the more strong of a support is, as long as it's traded at least 2 or 3 times. The more times that it trades, the higher likelihood of a failure of that support. Why is that? Well, if you take it back to the previous example, all right, at 7:08, some traders got long. At 9:01, some traders got long. At 9:08, some more got long. 9:26, more got long. 9:46, long, 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 long. What are long traders? We just talked about this. Long traders are what? Depletion of demand. That's a great way to say it, Bill. It's a depletion of demand. They're soaking up that buy liquidity. So long traders are sellers actually waiting to happen. And if you look at what happened next, let me just take you to the next chart right here. That's exactly what happened. This is my live trade from today from the room. I shorted it right on that break of structure, and I cashed out relatively quickly. As a day trader, I could have held for that second swing, but I value getting paid in my trading over being right. And I'm going to tell you guys that one of the biggest reasons new traders fail is they're looking to be right. And I'm going to tell you this, being right has absolutely no monetary value in trading. You could be right at your other job because you have to be right because you need to get paid so you can support your family. In trading, being right is absolutely irrelevant. The most important part is getting paid. And when you seek to be right, you do things that allow you to lose money. When you seek to get paid, you do things that get rid of your mind having to be right. You don't have to be right. And what I did here was I said, I'm going to get paid. I see some more downside. I didn't really float. I get into thirds into my positions. I didn't really float a position, took a third exits and canned the trade at 57.23, which is the overnight low. But the big point I want you guys to see here is this all set up based on the fact that we had a whole bunch of longs piling up and accumulating. And that's the trade. That's how retail sees it. They say it's a buying opportunity because they're taught to see this as a support. Whereas the professional will look if they could fade that and run down the stops and then buy it on the upside, all right? Before any move is usually a stop run. Why? Because if everybody's long, where's the next dollar going to come out of to push the price higher? It's not. Everybody's in the position, they've maxed out their buying power, now they have nothing to do but run for the hill. And the analogy I use is you got a small room with 1,000 people in the party and one exit door, and the fire gets lit right in the middle. There's one door, they're all running for it. It's not going to work out. Most of them will be casualties. And another thing I want to show you is, has anyone seen this type of chart? This is a lot more day trading focused. It's also available, this kind of analytics and order flow, supply demand levels is available for Forex as well. So Forex, commodities, bonds, which is a fixed income product, equity indices, everything. What you're actually seeing is Bill, exactly, Bill. Bill said right is ego. Trying to be right is trying to appease your ego, not your wallet. Being right won't serve you any purpose, to go back to that discussion, because I've been right and lost money, but I've been wrong and made money a whole lot more in my life in trading. All right, what you're seeing here is inside the candle. So most trading schools and education areas will teach you the candlestick. Candlesticks are phenomenal, but that's education brought into the Western world from Steve Nissen from Japan and their way of analysis, when they actually had to write things with a pen and pencil. And the game has changed. If you're just following candlesticks, you're not doing enough to give yourself an edge as a day trader successfully. What you have to do is look inside the candle. One candle might look like this, but the question is, how did it look like that? The end result is not the means to the profit. How did it form? And what you're looking at here is called seeing inside the candle. You're seeing order flow. You're seeing on the left side sell activity, on the right side buying activity, if you split this in two. And what do you see? You could track that the sellers are starting to move down. Every time it gets red, that's a sell level, that's a sell level. This is exactly what preceded on the break to run all those stops. There's absolutely, notice how there's a green here on the left, but no green on any of the other charts. That indicates there's a weakness of buyers, they're exhausted, sell stops are coming out, all right? And that's the kind of things that, here's what it looked like on a footprint chart, because it's what it's called. You saw the stops run, here's again my profits being taken, and then another dump back to the downside. But once it went red, it never let loose. It just continued to wipe stops. That was an oil trade from the room today, all right? So how do you find these stops? No problem, Aaron. Aaron says, thank you. That's a new way to think. I encourage you to think that way every single day, Aaron. It's important to be right to survive. Our subconscious mind, its primary goal is for survival. And I'm gonna get into a little bit of psychology. Let's see, will I have time? It's 3:10, I'll have a little bit of time. Its prime goal for your subconscious mind is survival, Aaron. And when you start to look for being right, being wrong becomes associated with your subconscious as something against your survival. When you're wrong, if you're a hunter and you're wrong and the bear comes and eats you, that's what your subconscious mind is thinking. Your subconscious doesn't know the difference between being wrong in a trade or being right in a trade and being wrong or right out in the wild where it could be life or death. And that's why when we train ourselves to be right, we train the wrong receptors to fire when we're in a trade. That's why sometimes you'll be in a trade and you'll say, holy crap, I looked at my results, I lost $500 today and I don't remember doing any of these trades. The real answer is that's because you didn't. You weren't the ones doing those trades. That's your subconscious mind seeking validation, seeking to be right, seeking survival. So yeah, use that tactic. The second you flip your thinking to say, I'm not trying to be right, I'm trying to make money, let me ditch my bias, the world opens up to you in trading. And I can tell you that's the single most important thing that started to drive success in my trading. All right, here's how you find stops and how to trade on an intraday basis. It's a day trading strategy. Number one, stop using a time chart. If you're using a 5 minute, 1 minute, 15 minute, 30 minute, 30 second, none of that matters. All right, you're not giving yourself an advantage. The reason being is nobody cares about time except you. The market doesn't care about time. Time is only a currency for humans. What does the market care about? Two things: volume and what else? And price. Time is a little bit of an amplifier for emotions, but most importantly, it's volume and price. Why the heck are we looking at time charts when it's not important? And the number one thing you could do is ditch the time chart. You need to look at a stronger template. I could tell you in institutional trading, especially in proprietary firms, if you go into any desk, coast to coast, and you sit down, there will be absolutely zero traders trading a time chart. All right, time charts for retail. And the reason it's for retail is because that's all that we think there is. But there's a whole other world of stuff, and I'll show you all these things, show you the strategy and everything in a transparent way. And while I said that, I just got stopped out on an ES trade. I guess that'll teach me for being in a trade while I'm recording a webinar. So I paid to be here. Start reading order flow, that's number 2. All right, if you're in a lineup to buy an umbrella, do you think it matters if it's gonna rain today or not? Yes or no? Based on your negotiation, do you think it's gonna matter if it's gonna rain or not when you're buying an umbrella? Absolutely, it's gonna matter. That's gonna determine how much you pay. So it's always baffling for me when some traders are purchasing an asset without actually running through the analysis process based on supply and demand. Supply and demand is not a level. Supply and demand is a real-time auction. It's orders flowing between buyers and sellers, and analyzing that data or looking inside the candle gives you the edge that you need to make the right decision. All right, so start reading order flow, and I'll show you how. The quickest way to get started is. All right, number 3, think in terms of liquidity. Stop thinking about where the market's going. That again goes to being right. All right, there's a lot of traders will say, well, the Fed said this, so the dollar should do this. No, that's not true. It doesn't matter what the Fed says. It matters what the market thinks and what the psychology is baked within it. And what liquidity means is look on areas on your chart where you see large orders. Wherever there's large orders, here, I'll show you an example right now. This is my oil chart, and you could see here up 600 on oil, but I'm down 512 on S&P today, and that's the trade that I just got buried on while I was doing this presentation. That's okay, that's life. I made about I've offset that on my NASDAQ trade also. But what I'm trying to show you here, the real news I'm showing you is look on the structure of the market. There's buyers on the left, sellers on the right. The most important thing that you should be looking at is trying to determine which side is the right side. Is it the buy side or the left side? Which side has more dominance? And you're looking for big levels. Right now on oil, it's trading 26 bid, 44 bid for at 26, 40 offered at 27. So you quote the oil market. And if you scroll up, you could see the next big levels, 57, 57, 57, 55 on the sell side. There's 107 sellers waiting to sell there and 111 waiting to sell here. This is the question. Is the market gonna go down or up based on the fact that you know there's big sellers up here? Well, what you're looking for is the market to go up into the level of the most demand or supply. The market, and remember this, because this is a huge lesson that I didn't learn for years and it took me a lot of money to learn this. The market moves to and through liquidity, not away from it. If you got a market that's heading down and you have a massive seller of 5,000 lots show up, it doesn't mean it's gonna go down, it actually means it's gonna go up because it needs to trade that liquidity. The market is a constant mechanism of evaluating supply and demand and chasing liquidity. All right, so flip your psychology, stop being right and be profitable. Start thinking liquidity, where are the orders, and you're gonna start to see where the stops are. Liquidity is nothing more but stop losses. Buy stops or sell stops. All right, read order flow and you stop using a time chart. And last but not least, use sentiment indicators. I can't stress this enough, and I understand there's different ways to make money and everyone's got their own approach, but indicators in 2017, very few of them work. In fact, I would venture to say I use none of them. If you look at my charts, you'll never see a true indicator on it. It's all an indicator that's based on order flow statistics. So it's actually a print of raw price. It's not past price, it's current orders flowing through. And these sentiment indicators are telling you one thing: who's got the upper hand? Buyers, the buy side, or the sell side? That's all you need to know. All right, because again, you're not looking to be right, you're looking to be profitable. So forget about being right. The chart's telling you who's right by analyzing their orders. Imagine being able to see every single person's transaction on the market. Wouldn't that be powerful data? And that's exactly what you got to look. And I oftentimes hear people say, well, I work full time. Well, I only trade 2 hours a day to make my full-time income, 9 to 11 a.m. in the trading room. And I also hear the other excuse. They say, well, I'm a longer term swing trader. I don't need to know how to day trade. Wouldn't you want to know the precise moment of a buying opportunity, even if you are a swing trader? Think about looking at a battle from up top. The general's commanding the troops down here to fight, but you got to know what your troops are doing. One by one, you got to know their mentality and how they're fighting and how to deploy them. So even if you are a swing trader, you need to know how to drop down on a day trader level to make an entry to ride your swing trade. So swing traders profit from knowing how to be day traders. All right. I'll tell you, Joe. Richard, bingo. Volume acts as a magnet. That's exactly what I'm saying, Richard. Volume is a magnet that pulls price towards it. And it's not just volume, it's inventory. All right, on any given chart, there's volume that actually trades, and then there's inventory that's waiting to trade. That's intent. So volume that you read at the bottom of your chart is actual transactions. Inventory on the price ladder is intent. And when you balance the two, that's when you start to get magic. And I'll show you some concrete examples in just one moment. Here's an example of your time chart on the right. This is a 1 minute chart on the S&P 500 futures, very sloppy. You could see that you could see why you're getting stopped out. You buy it here, it wicks down, it pops back up, it's choppy, you don't know where you're going, it breaks out, head fakes you to the upside, head fakes you up to the downside, and finishes right where you started. It's because time is not a relevant metric. Look over to the left. This is called a point and figure chart, and it's actually more of a reversal chart. For the S&P 500, my favorite settings for reversal, 6 tick and a 5 tick. That means every 5 ticks that it moves, it prints a new candle. All right, so a new candle is only formed when 5 ticks move. Why is that a beautiful thing? Because if there's a dead zone that you're getting chopped up in every 5 minutes, it's not going to be there in the PNF chart because it's not going to move. All right, you need something to eliminate and filter out the noise so you could stay on board with the trend. This is what causes emotion, all this chop up and down. So start using a chart that's not time-based. That'll be my challenge to you, whether you're a swing trader, day trader, investor, whatever it is, use non-time charts for your analysis. Use a tick chart, use a reversal bar chart, and depending on what market you're using, there's different settings for it, all right? That's the one tip. And I share this a lot with some traders who have been doing it for 10, 15 years. They have no idea about some of these charts. Here's an example on S&P 500. Absolutely, volume works on the stock of the option, but not the option itself. Options volume is not really indicative of, I mean, it could work. I haven't applied it, to be perfectly honest with you. M.NA. Here's an example of a trade just recently on the S&P 500. Prices are selling off, selling off. You're seeing some sell candles here show up, and I'll explain them to you in a moment. How much time do I got? 10 minutes. And at the bottom, you start to see a filter. These filters at Trade Pro Academy, the way we've configured them, they show you when multiple orders hit the book at the same nanosecond. What does that tell you? If 100 traders are trading on the way down at different levels, that tells you it's a down market. If 100 traders sell at the exact same moment, that tells you it's a very oversold market. So on the downside, I have a blank screen that literally just lights up whenever there's traders trapped. What does that mean? As soon as it goes red, most traders will assume, hey, that means I should short. Actually, that means you should start buying because just about everybody's short. All right, everybody is short this market. What is a short seller? If a long seller, if a long holder is a seller waiting to happen, what's a short seller? How does a short get out? What do they have to do to get out of their short position? They have to buy. They're a buyer waiting to happen. So what you're looking at on your day trading template is looking within the candle, looking at the order flow techniques and finding levels where traders are stuck just to literally buy so they could run their stops. What you're getting prepared to do in this trade setup is you're finding peak selling, you're finding a filter which shows a lot of shorts are getting in at the same time. And when everybody's short at the same time, the market's going to go up. So you're actually preparing to eat retail stops. It's exactly what you're doing. And I mean, we look at a lot of correlations as well at Trade Pro Academy. You see there's a correlation chart here. There's a lot of different dynamics. You can see I got long right here. This is a 6 lot trade. Got long at these 04 evens, 04 quarters averaged in. And I literally got that stop loss. When was the setup happened? 10:09 right here. 10:11. We cleaned shop on a 06 fill. So I got 04 to 06, 2 points. 2 points on the S&P is $100 per contract, $600 in 2 minutes. Now, I'm not saying that if you multiply 2 minutes times 30 at 60 seconds, you're going to make $1 bajillion a day. But I'm saying if you're patient and wait for the right opportunities, wait until short sellers are so desperate and you buy it, you're going to wipe the stops with them. And here's a trick I usually give traders. This is an invaluable trick on its own. If you're short, ask yourself, if you're planning to get long, if you're planning to buy a stock, anything, ask yourself, if I was short at the moment, put yourself in the mindset of the short seller. How do I feel? How do you think this short feels up here? It hits the level once, twice, 3 times, 4 times, it can't break. What's the short saying? I'm going to put my stop right here. If it can't continue, I'm going to get stopped out. All right, what if you shorted here? You're saying, uh-oh, grapefruit eyes. It's rotating and you're not getting paid. What are you going to do as a short down? You're going to put your stop up here. Everyone's short. Everyone has their stop at the same place. Markets move to and through liquidity. That's why we go up. Does that make sense to you guys? Does anyone have an aha moment? I'm trying to change the way that we think about trading because the world's evolved a lot. I can tell you this software that you're using right here, it's called Market Delta. It's built on CQG. That's the back end of it. If you go to Goldman Sachs on their trading desk, they'll be using this. This for charts and TT for trader execution, trading technologies. All right. Aaron, did you have an aha moment? I told myself today, if one person has an aha moment, all the coffee I drank in preparation is worth it. All right, good man, Aaron. Thank you. I have explained why obvious swing levels invariably get hit overnight. Exactly, Richard. Exactly, because the morning traders, I mean, I do a whole piece on this. This is a whole 1-hour webinar I have for our members online. The day session is not just 24 hours. There's a European session, there's a drive, there's a bus cycle, there's a head fake on the US Open that rolls over the Japanese session. There's a whole cycle that you could use in conjunction with this to find stops. But you're right, there you go. Whenever somebody is short and they put their stop losses and leave for the day, guess where the day traders are taking it? Right there. So if I've just inspired you to think about one thing here, it's this. The reality is, to be a profitable trader, you got to act like a professional trader. You got to act like this is your job. If you don't believe that this is your job, it's not going to become your job. You got to think, how is this a business? How am I going to make it pay me? I'm not trying to be right. How am I going to make this business pay me? Because that's what you're after. You're after the money. If you're after the thrill, you could go to the casino and get a free pop or a beer with it, at the very least. And the other thing is, to be a professional trader, you have to take the retail money. You're going to take somebody's money on the market. You have to accept that. Somebody's money is coming into your pocket if you're doing it right. All right. So you got to think against the retail mentality. You got to think against the massive orders coming in, and you got to spot opportunities that are high probability, low risk. That's kind of the crux of what we do. You got to trade with the trade pros. And I'll tell you guys a little bit about what we do, because I only got 5 minutes. What moves the markets? Stops. All right. Stop losses is what moves the markets. You could hate that or you could profit from it, and you decide. So when I asked you guys at the beginning, what moves the markets? That's it. Stop losses. Why? What are stop losses? Liquidity. Why are stop losses liquidity? Because there's a lot of orders waiting there. Why does the market move to liquidity? Because everyone's there. So I've come full circle. So hopefully a few more people have had an aha moment. Maybe I'm just the only one. Here's the Trade Pro Edge. We got institutional trader quality training. Learn things you didn't know existed because they work. This is scratching the surface. We have trading checklists, how to develop your system. There's some emotional psychology training, how to start from demo to live with the 5-week transition program. All that's included in what we do. And we're starting to roll out some education to some proprietary firms as well. Not at liberty to discuss any of that. There's very heavy things that you go through when you're dealing with a company that's got very proprietary models. But we also have a live daily trading room. That's included as well. We have community learning. You're going to join and you're going to be a member who's not the best trader, but not the worst. So you could help others and learn from others. That's what I've tried to create with Trade Pro Academy. That was my vision in 2012. And that's what I've been going for. And at the end of the day, you're trading with people who evolve to market conditions. I change. I have some students saying, well, George, you put our chart template up. I let everyone download my chart template. Everything you see, you could download if you sign up. I have all that available, open disclosure. I don't hide anything. All my indicators, everything I follow is available. And they say, well, it changed. You had one last week and now it changed. I'm like, did the market change since last week? You better bet I'm going to be changing with it. If I don't change with it, my money is going to be the one feeding other people's children. They need to get that deep into it, but you got to evolve with it. Trade Pro Academy, that's all we do. We just evolve. If you look at where we started and where we are now, we've evolved every single day, and it's a constant evolution. And we don't evolve alone, we evolve together. That's the beauty of community-based trading. Here's what we offer. It's up to you guys. I don't want you to purchase this. If it's not right for you, I want to work with people who want to be there. I have turned clients away who have said, this is what I want to do. And I said, this is not right for you. It's just not the right package. You need to look somewhere else. And at the end of the day, we have 3 different level subscriptions. Swing Trader is our $79 a month package. We give you swing trade ideas. We have a full course on options and futures trading on the swing basis. We have a daily newsletter, weekly newsletter, and a live webinar every Sunday at 8 p.m. Eastern. Day Trader Pro, we're basically trading every morning in a live room from 9 to 11 a.m. and a full institutional grade learning experience. On our website, we provide you checklists. You can speak with our members. It's a community type forum. And then Sunday live analysis as well. The elite session or the elite package comes with the swing trader plus the day trader, plus you get a group coaching session every month. And these are really powerful. These are where I make aha moments. My entire goal here is to make an aha moment happen once a month with our elite subscribers. And you get both of these bundles plus the group coaching session at 20% off. I price it for value. All right, a few successes I want to share with you guys. I got 2 minutes from today's room. One of our members shorted Nazi, gained $2,750. I love it because he made more than me in a single day. He made more than me today, and I love that. I love when trade pros make more money than me. I feel a sense of gratuity because I've been working towards this from 2012, and I started the business with wanting to help people. It just warms my heart. You could call BS on it, or you could take me at face value. I'm a flat out honest guy. Another member made $400 on 2 contracts. Love to see that as well. Another trader just started out. This is just from today's room. And I asked him, are you trading live? Because he was having a bit of a rough patch in his demo results. And he was doing live really bad and then went to demo and started to turn around. He said, yes, I'm working on that. So what I did, lots of good news is 1 lot, 1 trade up $25. And I always tell people, it's not only $25, it's $25 because you did the right things. Whether you want to make $25 or $2,500 a day, the actions are the same. It's just the scale that changes. All right. So I always tell our traders, focus on making $50, $100 a day. To put another 0 at the end of that, it's no problem. Once you can make $100 consistently, $1,000 is nothing. $10,000 is nothing. It's your psychological limit that's going to cap you. You're going to hit a ceiling and you're going to say, "Dope, I can't make any more than this." Why? Because psychologically you have some issues, and we work on that. All right. Anyways. We have a few members that are saying they did a good job. After losing 60% of my account, I packed it in. Learn what moves the markets. Of some first lesson on order flow, and I got to tell you, big aha moment. Thank you for all you do. Things you mentioned, your updates are routine for you, but for me, they're eye openers. It took me 4 years to get to this moment. Thanks for your transparency and willingness. You guys see me do good and bad in the trading room. I think I have some of you here today that are trade pros. You see me do good and bad, and I'm always transparent. Best place to start. Here's a member that we worked with where I provide them point-by-point analysis, and I create a little money management grid for them. So here's the bottom line. Nothing comes from doing nothing. If you do the same things and expect different results, cliche, I know, but it's legitimately the definition of insanity. So at the very least, try something different. You got a lot of options online, and I would love to be the person that gives you a few more aha moments in your trading career with education. And I throw in a quick midnight bonus because why not? I'm going to be at hockey tonight, but all the purchases are time stamped. If you get in here before midnight on today, I'll give you guys a free group coaching session, specifically at people that just sign up today. I'll work with you in a group setting, and we'll set up your trading plan. We'll work on anything you have questions on, psychology, chart setup, whatever you want. All right. I'll help you craft your trading plan essentially, and look at, other than trading plan, I like to use the word craft yourself, work on yourself. If Lewis Hamilton came up to you and borrowed your minivan and you took Lewis Hamilton's Ferrari, I guarantee you he puts in a faster lap time around a Formula 1 track than you do. You'll probably crash. It's not about the vehicle, it's how you drive it. All right, guys, jam-packed with value. Check it out. How do you go? What link? Go to tradeproacademy.com. Look at which package makes sense for you. On the homepage, there's a little quiz that helps you decide which one's right for you. Give it a shot. First 14 days, if you hate it, you email me, no questions asked. I'll give you a refund. We have 4.7 star rating on our customer service. All we care about is you. Our #1 metric at Trade Pro Academy is our customer success. Not mine, not Donna's, who works with us as a success manager. It's you.